You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. Yep, it is time for TWIFO This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever insightful, ever engaging, ever educational network upon which so many of you are binging these days. And hey, we're not biased at all at the end of the day. If I sound a little bit different, it's because I'm still coming at you from the southern studio down here, so not in Chi-Town, which is a good thing these days because I hear rumors that Chicago has the worst air quality on the planet right now as a result of all the wildfires from Canada. So we made fun of all of our friends in New York. We had some fun with that a couple weeks ago. Now it's our turn, apparently, in Chicago. So a good thing that I'm down here in the southern studio. We'll be down here for another week and change, so hopefully that'll be enough time for all of that to clear itself up. Speaking of clearing things up, we are here to clear up a lot of great content on TWIFO for you over there in the world of futures options. What is moving and shaking and lighting it up in the world of futures options this week? You got to tune in every week to find out. And of course, if you want more content in your lives, and who can blame you? These markets are just crazy at the end of the day. Only one place to go. theoptionsinsider.com/pro is the place to go to learn more about all that fun. Make sure you do it soon because we're coming up at the end of the month here, and that will mean the end of this month's giveaway for the Pro Trading Crates. You got to get your name in the hat before the end of the month if you want to be entered into that drawing. And trust me, you do. We give away some awesome stuff. And, of course, everything else you get there. 200-plus episodes of content waiting for you the second you hit that button over there on the theoptionsinsider.com/pro site, as well as everything else we have going for you. Live access to this, everything else we do. 2 exclusive shows a week, more coming all the time, and of course the great pro giveaways. And of course, exclusive early access to a lot of great content there that the rest of the network has to wait quite a while for. So theoptionsinsider.com/pro, the place to go. As we go into our first segment, it is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everyone, welcome to the Movers and Shakers, the portion of the show where we break down everything that is lighting it up to the light side, a.k.a. the upside, and to the dark side over there at CME Group this week. And not to give away too many spoilers, but I hope you came ready to get your hands dirty. Hope you came looking to get a little green because, yeah, we're going to be talking about some ags this week. Doesn't matter which direction we start with. Let's do my favorite. Let's start to the dark side, listeners. And number 5 to the dark side this week, we're going out to ags and we're going to hang out there. Number 5, it is rough rice off 5.51% this week, so definitely a rough week for rough rice. Number 4, KC wheat off 8.02%. It was number 4 in the other direction last week, up 8.22%, so pretty much a scratch over the last couple of weeks. Soybean meal, number 3, so we're still staying in ags, off nearly 9% this week, 8.94%. It was number 3 in the other direction last week, up 8.7%. So it's like we just flipped the charts from last week to this week. Number 2, still hanging out in the ags, listeners. It is Chicago wheat, off 10.86%. It was number 2 in the other direction last week, up 11.33%. So we are pretty much just giving back everything that we gained last week. And then number 1 to the dark side this week, and also our biggest percentage mover on the week, it was corn. So still staying in the ags, listeners, off nearly 15%, 14.62% to the dark side this week. That comes hot on the heels of last week where it was number 5 to the upside, up 7.4%. So just a rockin' couple of weeks out here in the ags. And you know what? We're not done, listeners, because we're transitioning to the light side. And it's looking very similar up there. Number 5, still staying in the ags, this time to the livestock. It is lean hogs, up 2.53%. This has been a conversation we've had a few times on the show now. These products, lean hogs and other livestock products, they used to kind of be the hidden secret of the ags complex. Not a lot of paper going up out there, kind of traded by appointment. You had to really know what the heck was going on out there to even consider trading these. And I would certainly urge people to be cautious if they are going to dive into these, but they're not as much of a roach motel as they used to be. There's liquidity now there, so you don't have to worry about getting in and not being able to get out. They actually trade across the month, so they are much more viable of a prospect if you were to entertain it now than they were, let's say, 5 or 10 years ago in the livestock options markets. Actually, we're going to take our only departure here to the light side for number 4, number 3. We're moving off. Remember we talked last week about some of those S&P sector indexes. In particular was the real estate sector last week. The first time it made it onto our movers and shakers. Well, it's a repeat offender. It's coming back this week, this time to the light side, up 2.56%. So taking our number 4 spot. It was number 5 in the other direction last week, off 3.48%. Before you get all hot and bothered, there are 0 options trading on this or pretty much any of the other little sectors out there. So they're intriguing, but they're pretty much futures only and doing light volume right now. So we're not quite at the point where there's something you could sink your teeth into, but intriguing nonetheless. Number 3, still staying in those S&P sectors. This time it is the energy sector also making its inaugural appearance on our movers and shakers report. So real estate sector breaking in last week, energy sector breaking in this week. You can also maybe see the hand of the truncated holiday week, things getting a little light out there. Some of these more esoteric products making it into our top 5 this week. Number 3, the energy sector, up 2.68%. Then the rest of it is all ags all the time. Number 2, soybean oil, up 2.98%. It was number 1 in the other direction last week, off 7.67%. And the number 1 light side mover this week, listeners, it was feeder cattle. So back to the livestock, up 4.23%. So given how pretty much everything in our top 10, except for 2, is on the ag side, I think we have to start there
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, for all you ag heads who've been angling for an all ags all the time show, you're going to get your wish this week. You know where to go, listeners, to play ball. CMEgroup.com/TWIFO, TWIFO is the place to go to begin your ags journey this week. We're going to go on that asset class drop down, and you're going to go right to the top of the list. You don't need to mess around this week. Right into ags. Let's start with the big dog. Let's start with corn. It is our number one overall percentage mover and shaker this week, off 14.62%. Again, coming hot on the heels of a week where it was up 7.4%. So just a rock'em sock'em robots couple of weeks out here for corn. And looking at the numbers this week, another one of those weeks, listeners. 1.23 million contracts on the tape for corn. Corn usually around 400, maybe 500,000 contracts on a really busy week. 1.23 million. You're talking 3x that, listeners. So just a robust week, to put it mildly, out there. Coming into the start of the show, we have corn, that front future going out in about a day. It's at a 523 off 61, almost 62 handles just since Monday, about 10.5%. So just a lot of action out here in all things corn this week, listeners. And of that 1.23 million contracts, it's very refreshing because about exactly a third, 33%, is going up in the Dees contract. That's 148 days to go. Everything these days is 0 day, front day, maybe front week if you get crazy. So going out 148 days, it's just refreshing. It's different. It's kind of nice. We can talk about things like vol again and time decay. All these things have much more merit in a little bit longer dated product as opposed to something that's going away in a couple of seconds. So let's go on out to Dees, listeners. Where's that Dees future hanging out? A little bit higher, 528.25. That one's off about 60 handles on the week. So again, just a corn apocalypse this week. In terms of action, given all this sell-off, you might think vol is popping out here, but again, that's very much an equity mindset, listeners. What happens to the vol, depending on the movement of the underlying, depends on a lot of things, including the skew. That's going to be very by product over here at CME. So right now, vol is coming in about 4, almost 5 points in the Dees corn. It's off about 4 3/4 points this week, trading right around a 27. So still frothy, still in the high 20s, obviously nearly 2x, or actually looks like, given today's level, over 2x what we're seeing out there in the VIX right now, but coming in about 4 points, so it was in the 30s last week, giving some of that off this week. In terms of skew, last week the puts 2.4% cheap, so again, that shows you why vol is coming in as they're moving down the skew curve. The puts are at a discount, so when that's happening, it's obviously the opposite in equities. So when you're seeing that, you expect the vol to come in, and now the puts are even cheaper, 5.5% discount. So no love for the puts, even though we are selling off pretty aggressively. The calls last week, 5% bid. This week, 4% bid. So the calls staying pretty much steady. The puts coming in even more. That is intriguing. In terms of action, the most active contract out here in a very active week for corn, listeners. Again, I said we're at that Dees future at a 528.25. So we are not that close to, but we are threatening the par strike, the 500 strike. So it makes some sense that the number one big trade out here in corn this week would be the Dees 500 puts, doing 34, almost 35,000 contracts. The big day for those, Wednesday, 14,000 and change on Wednesday, 12,500 on Tuesday, opening both days. 4,800 today, so no slouch today, 3,300 on Monday. It seems like opening most of the week, which again makes some sense as we are getting closer to that par strike. Makes some sense. People would be piling into those puts, or maybe if they think we're going to bounce, maybe a little bit of an overwrite, but probably, given the nature of this product, probably opening up some downside puts. But then again, we are seeing that skew get even more of a discount to it, so there could be some overwriting going on out here. Right behind it, we have the 600 calls, so the pars in the other direction, doing almost 31,000 contracts. So a bit of a tug of war between the 500 puts and the 600 calls in December this week. The big day for those, not Wednesday, but actually today. 15,000 and change going up today. 10,500 on Wednesday, 2,800 on Tuesday, 2,300 on Monday. Looks like closing on Wednesday and then probably opening, looks like, the rest of the week. It's hard to tell with today because there is 30,000 contracts open on the strike, so 15,000. They could be coming to close today, but intriguing stuff out here. A lot of paper going up in both directions here in Dees corn. And then right behind that, we have a bit of a tie for third between the Dees 530 puts going up 24,000 times. The big day for those is actually Tuesday, so we're kind of all over the place on this paper. Wednesday, today, Tuesday. On Tuesday, it was the 530 puts doing 8,500 contracts, 7,400 on Wednesday, 4,900 today, and 3,200 on Monday. It's like opening earlier in the week, closing on Wednesday. Obviously, we're not sure about today. And then going up to the tie for third place, we also have the 700 calls in September doing 24,000 contracts as well. The big day for those, going back to Wednesday, nearly 18,000 on Wednesday, about 4,000 on Tuesday, 1,500 on Monday, and just a couple of hundred today. So all that paper going up pretty much Wednesday and a smattering on Tuesday, opening on both of those days. So interesting. Opening paper on the 700 calls in September, listeners. Intriguing. That's why you have to look at the numbers, listeners, to break down all of the action. Let's scroll around a little bit. You know, the ags, unlike a lot of products, they tend to be concentrated in a couple of expiration cycles where most of the paper is going up. In this case, it is mostly December, but looks like a little bit going up here in that SEP contract. Let's dig around out there, see if anything else is going up. Actually, the 600s are going up in September as well, doing about 22,000 contracts. But the big day for those was Tuesday, 11,000 exactly going up on Tuesday, mostly opening, 6,200 on Wednesday, 1,300 on Monday, again, opening all those days, and then 3,600 today. So just an explosion of paper across the board here in corn. Listeners, have you been slinging corn? We do get a lot of questions about where should I start when it comes to the ags. We've often advocated for corn. It has the most paper. You can get in, you can get out, fairly tight markets. Again, as you can see, it doesn't trade exactly like an equity. The skew is different. The vol performs a little bit differently. So if you can wrap your head around those differences, those nuances of this product, it could be an intriguing one. If you go out there expecting it to be just another S&P, a little bit of a different beast. But it's intriguing if you're looking for a place with a little bit of vol. Again, we are close to a 30 in a lot of these contracts. Actually, some of the nearer dated ones like September and August, they are in the 30s and threatening a 40. So you go out to December, the vol comes in a little bit, but it's still at 27. So we still are looking at a fairly volatile product. So if you are intrigued by the ags, looking for something a little bit more volatile, you could do a lot worse, listeners, than slinging a little bit of corn. We were also talking right behind corn, we have number 2, Chicago wheat, and it's often difficult to talk about corn without talking about wheat. So let's go out to good old SRW wheat as well. Pop out of that corn drop down. Just go down one slot, SRW wheat, right below it. Unfortunately, it's a distant second when it comes to volume. We were talking well over 1 million contracts in corn. Not quite there in Chicago wheat, but a busy week nonetheless. 130,000 contracts. Nothing to sneeze at out here. Where is Chicago wheat right now? 668.5, off 78 handles or 10.5%. Of course, if we go out a little bit, we see that nearly half, about 45% of that 130,000 contracts went up in the contract that has about 22 days to go. So we're looking at the August contract out there. Interesting. So we're going to sink our teeth out there. What is the vol in August corn? You might be asking. It's about 38.25, off about 1.25 points. So fairly frothy. Was threatening a 40 not too long ago. So again, that's a fair amount of juice. A lot of the products you're looking at right now are looking pretty anemic from a vol perspective. So the ags might be one of your few bastions of volatility if you're out there looking for a little bit of vol these days. In terms of skew, again, very different skew out here than you may be used to in some other products. Nobody cares about the puts. Everybody's interested in the calls. So it sounds almost like a metal skew. Last week, the puts 1.2% cheap, and the calls were 3.6% bid. That has pretty much exacerbated in both directions this week. This week, the puts coming for them pretty aggressively. 6.5% cheap are the puts versus the calls, 4.6% bid. So intriguing stuff out there. And in terms of the big dog out here in Chicago wheat, it was the September 1100 calls. My goodness. 1100. I said we are at a 668 in that future, listener. So 1100. You're talking nearly a 2x out here. But nonetheless, that's where the action was this week. The September 1100s going up 5,500 times this week. Almost all of that was on Tuesday. 5226 on Tuesday. All of that opening. So someone piling into the September 1100s for size this week. The rest of the paper, it's a couple hundred contracts, was scattered throughout the week. It was all on Tuesday. My goodness. And right behind it, we had the 800 calls going up. They traded all week long. 1,600 on Monday, 1,200 on Tuesday. So it doesn't quite line up like some sort of ratio spread like we're used to seeing in the metals and some other products, listeners. So it does seem like these 1100s just went up straight up. Doesn't seem like a vertical or a fly or anything else out there, because 800s were trading pretty much all week long. They ended up trading nearly 4,000 contracts, but scattered throughout the week, whereas 1100s traded pretty much all their paper on Tuesday. I don't see much else against it unless it's some really funky ratio that doesn't make a lot of sense. Intriguing stuff. 1100s in September. That's why we do the reports, to see interesting nuggets like that. I may have to dig into some blocks after the show and see exactly where that 5,226 lot of the 1100s went up, because that's intriguing. If I had to guess, I would not have guessed that for the size print out here this week. We also saw right behind it, the actual number 2 was in the August 800s going up about 4,500 times. Now, these, you can maybe think maybe there's a bit of a roll going on, because the numbers don't quite add up. They're about 1,000 less. They're talking about 5,500 versus 4,500. But you can maybe argue there's a bit of a roll going on. But again, the August traded all week long. 800 on Monday, 1,600 on Tuesday, 1,400 on Wednesday, and about 600 today. So if they're rolling it, they're doing it very strangely. They're taking it all off in pieces on one side and doing all of it on the other side in one day. So doesn't seem like it's any sort of spread or roll, listeners. It seems like it's just straight up the 1100s going up 5,500 times. 1100 level by September, listeners. We've seen crazier things. We did see wheat threatening those levels back in the crazy invasion days. Are we headed for something similar to that? We all hope not. That would be terrible. I mean, there were some dire headlines with the dam breaking in Ukraine and the impact that's having on the wheat market overall, but still, interesting trade. And we also have right behind it, we have about 3,100 of the 820s going up in September this week. Those going up pretty much in a couple of sessions, 1,700 on Monday, 1,000 on Tuesday, and then a couple of hundred on Wednesday. So intriguing stuff here for Chicago wheat. Looking to see if there's any other interesting and or aberrant prints. If you go a little bit farther out, the D700 puts we're trading. Those are now in the money puts. They went up about 1,000 times this week. Kind of scattershot throughout the week. No big prints out here, really. It seems like mostly opening. So opening on some in the money D's puts. Kind of interesting there. Yeah, shocking stuff to the upside here in September wheat, listeners. As we keep on rolling, so many ags to sink our teeth into, listeners. We have the beans, particularly soybean meal and soybean oil, lighting it up this week. So let's go out to the beans. Let's pop out of, well, actually we can just scroll down here in the same grains and oilseeds list. And let's go down to the meal. Let's pick our poison here, listener. Right now this week, the meal has about 65,000 contracts on the tape versus the oil, which has about 67,000. So kind of pick your poison. So let's hang out in the oil this week, because why not? 57 2/3 is where that front future is hanging out. That goes away in about a day. I said about 67,000 contracts on the tape. 56% of that going up in the August contract that has about 22 days to go. So we're going to hang out there, listeners. What is the vol in soybean oil? 37 1/4. So again, fairly frothy. The ags are the complex to go to if you're looking for a little bit of vol right now. Listen, that's actually up about 2.5 points on the week. Skew-wise, the puts last week, 3.3% bid. This week, 5.1% bid. So unlike our other products we just talked about, the puts catching a bid out here. The calls last week, 6.7% cheap. This week, 3.9% cheap. So this does resemble a bit of a mini equity skew out here in soybean oil. And in terms of the big trade, we got the 60 calls in August leading the dance with about 5,300 contracts this week. Trading all week long pretty much. It looks like closing just about every day this week. So somebody bailing on the AUG 60s this week. Again, we are 57 and roughly 2/3. So maybe they're deciding bit of a bridge too far to hit the 60 strike, getting the heck out of Dodge. There are still about 10,000 contracts left on that strike. So if they are closing, they have more to go. And then right behind it, we have the 58 calls also going up about 5,000 times this week. Those are mostly opening. They don't really go or look like they're one-to-one by any means. The net volume is similar, but they're trading with 0 contracts today, for example. So they're trading a little bit different, nearly 3,000 on Monday. So if they are rolling, it's a strange roll. But again, we have seen stranger things out here. About 5,000 of the 58s going up here this week in August. Go a little bit farther out, see if we see any other interesting and or aberrant paper. We got 3,000 each of the SEP 65s going up this week, as well as the DEES 60s. A little bit of action on those as well. So like half of those DEES 60s going up today, about 1,500, and then 1,500 going up on Tuesday. Not much the rest of the week. Opening there versus the 65s in September. Those were trading pretty actively all week long, and looks like mostly closing there as well. So folks getting the heck out of Dodge on the 65. So intriguing stuff out here in soybean oil. Since we mentioned the meal and the similar paper, let's go out there really quickly as well. Again, all ags all the time this week, listeners. So all you ag lovers, you can stop sending your hate mail. We hear you. I'm just kidding. No haters out there, only lovers. 396, that's where the soybean meal futures are hanging out right now, off 11, about 11 and a half handles, nearly 3% since Monday's show. 65,000 contracts on the tape out here. 50% of that exactly going up in the August contract here as well, so we're going to hang out there. Vol here is a 29, off a little over 2 points on the week, so still frothy out here, but coming in a little bit. So again, keeping this narrative alive that there is a little bit more juice to be found right now out there in the ags and a lot of the other complexes we're talking about out here, with the exception of, let's say, nat gas and some of the energy. Let's go out to the skew. Last week, the puts, 3.4% bid. This week, 7% cheap, so a huge swing in the puts. The calls, 1.6% cheap last week. This week, 8.4% bid. So the skew has pretty much inverted. It went from bid to the puts and offered to the calls to now bid aggressively to the calls and an aggressive discount to the puts. Wow. Intriguing action. So let's go out here to August and see what's lighting it up. It's the 420 calls. Again, I said we're at a 396 in that front future. The 420 calls lighting it up about 7,100 times this week. The big day was Monday, 3,200 contracts, 1,600 on Tuesday, 1,400 on Wednesday, and about 1,000 today. Looks like mostly opening earlier in the week, closing in the latter portion of the week. And then right behind that, we have the 4 half calls going up about 3,700 times, mostly closing there. So maybe some folks bailing on the 4 halves and rolling down to the 420s. Again, the paper doesn't really line up, but it's close enough for government work here. And then we go a little bit farther out. We also go out to the 380 puts. These are in September. They went up about 3,600 times this week. Looks like the big dog is today, 2,100 today, 1,300 on Wednesday. The rest, such as it was, scattered throughout the week. Looks like mostly closing yesterday. Obviously, we don't know about today's paper, but it looks like, given there's only about 1,200 contracts open on the strike right now, that 2,100 going up today, probably on the opening side. Looks like we might have a bit of a vertical going up. Looks like a 380, 390, 410. So a 3-legged spread here. It's not a fly, though. It's no ratio to it. It's just straight 1-to-1. So maybe a bit of a tree or your ladder out here, but on the put side, which would be weird. 2,100, pretty much each of those, the 380 puts, the 390 puts, and the 410 puts, all going up about 2,100 times today. So intriguing out here in the September soybean meal. Let's keep on rolling through the ags, listeners. It's just an ags palooza out here today. I mentioned how these livestock contracts are really starting to come to life. So let's jump out there. Let's go out of the grains and oil seeds. Let's go down a few slots, I should say, to livestock. And then I mentioned this week we have feeder cattle at number 1 to the light side, up 4.25%, and lean hogs at number 5, off 2.5%. So let's hit on feeder cattle and see what's going on out there this week. Listeners, 8,300 contracts, so not exactly a banger week out here. We have seen more active weeks out here. Lean hogs, though, putting up some numbers, roughly 8x that, 64,000 contracts on the tape for lean hogs. Let's hang our hat out here. 95.25 is where that front future is hanging out right now, up about 4 handles or about 4.3% since Monday. In terms of action, it's the July contract that has about 18 days to go. That's leading the dance with about 34%. So we're going to hang out there. Front-dated lean hogs, listeners. Who knew? The vol here was nearly a 30, 29.60, up about 1.4 points. So again, threatening that 30 handle out here, keeping that vol argument alive across the ags complex. Looks like some interesting action in the skew here as well. Last week, the puts 9.2% bid. This week, 14.4% bid. So catching a nice bid on the puts. The calls, 7.1% cheap. Last week, this week, 6.6% cheap. So not a heck of a lot of evolution on the call side, but the puts catching a bit of a bid. And it looks like leading the dance this week, it was puts pretty much across the board. It was the 75 puts actually in August that took the top spot this week with a little over 3,000 contracts. The big day, actually today, 2,100 contracts today, 600 yesterday, and then a couple of hundred scattered throughout the rest of the week. So clearly opening, only 375 contracts open on this strike. So opening on these 75 puts in August here. Again, that future's at about a 92, so 75 still has a bit of a ways to go, but intriguing stuff here nonetheless. And then right behind it, we have the 85 puts in July going out in about 18 days. They did 2,200 contracts this week. The big day for those, about 1,200 on Wednesday, and then 600 on Monday. It looks like opening pretty much all week long. So opening on these 85 puts. Again, these are out of the money as well, but a little bit closer. These are about 10 handles out of the money here. And then not to be outdone, we also have the 90 calls going up in February of next year. February, 90 calls going up about 2,000 times here this week, listeners. The big days, actually Monday and today, a little over 700 each, and then a couple of hundred the rest of the week. It's like opening pretty much every day out here for these February 90 calls. Interesting stuff. That's why you look at the ags, listeners. All sorts of surprises lurking here in the ags. All right, that is going to do it for us this week. Kind of a Just the Facts, Just an Ags. Kind of a Just the Ags edition of all things TWIFO this week, listeners. But everybody's been writing in saying, hey, we want to hear more ags. There you go, listeners. We touched on lean hogs. We took an eyeball, a gander at feeder cattle. Not a ton of paper there. We did soybean oil and, of course, the meal, Chicago wheat, and for fun, a little bit of the old corn. So if you were here for rates or metals or something else, not really making it on the list this week. But don't worry, there's always more episodes of TWIFO to come, more analysis. Of course, if you want to do your own analysis in between episodes of the show, only one place to go, cmegroup.com/TWIFO, TWIFO. I'll be back again tomorrow from the Southern studio, hopefully still smoke-free down here, with Vol Views, noon Central, 1 p.m. Eastern, and then after that for all of our pro folks, with Options Oddities at 2 p.m. Central, 3 p.m. Eastern. You guys can check out the Pro, get Options Oddities, and all the other 200-plus episodes that are waiting there for you. TheOptionsInsider.com/pro is the place to go. Then back again next week, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.